Take a listen to what Tom Lee just said about markets, the Trump trade, as well as NVIDIA earnings that will be coming out Wednesday and after hours.
Join us now, Tom Lee, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. We can get to Bitcoin in a second. I want to talk just about the overall markets, Tom. And you think leading into Thanksgiving that slow sort of bleed, that slow bleed last week in the markets, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, and is the Treasury Secretary announcement will remove some uncertainty. You're following Polymarket to see who's in what. Bessent was at 70, but then Musk tweeted about Lutnick, and his chances went up. What is it now?
They've both fallen to sub 40%. So part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
We're using Polymarket to decide who's going to be the Treasury Secretary.
Stranger things have happened, right?
So you think we hear this week, and that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so. I think that's like what I'd consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact.
The Fed might not cut as quickly as possible, but you still said we're in a good place, dovish-wise.
That's right. Last week, markets were a little taken by surprise when Fed Chair Powell said he might slow things down for December. But if you look at December 2025, a year from now, the number of implied cuts is still the same. So I think he's dovish. He's just moving some of the timing.
Another clearing event, NVIDIA. You expect it to be a bullish clearing event?
I mean, most likely. I think markets get very hesitant in front of NVIDIA's earnings.
Really?
And once that's behind us, we'll see demand is strong, and I think market breathes a sigh of relief.
And then we did get a little bit maybe bullish or over our skis, so we pulled back to a support level where you feel more comfortable.
That's right. I think most of the major indices have pulled back to what would be technically viewed by our technician Mark Newton as support. So the NASDAQ is on the support line. S&P did a 60% retrace of its recent rally, and small caps have held above their prior highs. These are all bullish support levels. I
was wondering whether things were getting overdone when the Journal says a melt-up could be in the cards. And the Trump trade has already been going for a while. You think it's just getting started at this point? There's a lot probably for the markets to like, I guess, in terms of, he likes easy money, he likes low regulation, he likes lower taxes. There's a lot. It's more than a 2-week rally, maybe, in your view.
That's right. And I think maybe markets are course correcting because now with DOGE, the Department of Government Efficiency, there may be cuts to healthcare and industrials because of defense spending. So things that investors can focus on more deregulation of animal spirits, more like small caps and financials.
All right.
What about healthcare? You mentioned that in particular. It's not just DOGE that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bertolini about that in a minute. But how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
Okay, so clearly some of the things that I at least first implied from Tom Lee is he's not super optimistic about NVIDIA earnings from the standpoint of there is a risk catalyst ahead of us, which is NVIDIA earnings. Once that comes and goes, as long as it's not bad, as long as it's really good, it's going to be good for markets. But Tom Lee did not sound confident in that call. I would argue it's because NVIDIA is still sitting near its all-time highs. Now, I love NVIDIA. It's a great company. This computer you're watching, this computer I'm making this video on is run by NVIDIA. This computer is run by NVIDIA. There's not a whole lot to not like about NVIDIA, and that's part of the problem right now. Now, I think an even bigger red flag in regards to our markets than Tom Lee being uncertain about NVIDIA's earnings is Mike Wilson with Morgan Stanley that just turned positive on stocks for 2025, which he's been one of the biggest bears on Wall Street. I think that's a much bigger red flag. Check that out in the last video if you have not already. But Morgan Stanley and Mike Wilson believe in a bull case scenario, the S&P could go up almost 25% next year. This is not just a bullish call. This is a stupidly high bullish call. Even for a bull case scenario, that's up there. Nonetheless, I want to go over NVIDIA a little bit more. This article just came out at 5:33 p.m. today, so about an hour or so ago, that says NVIDIA Q3 preview. This is the big quarter. NVIDIA Corporation stock has surged 31.32%, driven by optimism around the Blackwell GPU. I believe this enthusiasm is overly optimistic and exposes valuation risks. The Blackwell GPU faces overheating issues in server configurations, complicating its adoption and potentially increasing cost for hyperscalers, which could impact NVIDIA sales. Here's the key part. Despite upward revisions for Q3 earnings, NVIDIA's high valuation and reliance on Blackwell's success make its current stock price unsustainable, warranting a strong sell recommendation. Now, I don't care about their opinion necessarily, but the first sentence is the big one. Despite upward revisions for Q3 earnings. Now, if this doesn't make sense, let me explain this. Wall Street seen expectations for this quarter earnings, for this earnings season, plummet right before these companies reported earnings. We're talking your Joe Schmo companies, your Mag 7s, besides NVIDIA, basically everything, right? Earnings estimates plummeted right before earnings. So in this quarter that we just got reported, EPS is only up like 4%, right, from a year ago. It's not a great quarter from that perspective. But what's happened? Companies are beating earnings estimates because estimates have been coming down. Not for NVIDIA. Estimates are actually going up heading into NVIDIA's quarter. And that's mainly because analysts have been so far behind the ball when it comes to NVIDIA. NVIDIA handsomely beats every quarter. And it makes analysts, like, what's the point of having an analyst if you can't forecast the company you're covering's earnings, right? There's no point in that. So Wall Street is just raising the bar and raising the bar. So we're going to get to NVIDIA earnings and they're going to be good. They're going to be great, but it's not going to be impressive because analysts raised their estimates heading into it and people expected more. That is a massive problem for NVIDIA, whereas other stocks this earnings season have not had that same problem. In fact, I can't think of a single other company that actually had their earnings estimates go up before the quarter was reported. Like, comment down below. I'll fact check it if you comment. And if you're correct, we'll talk about it here on the channel. But I can't think of one company that had their estimates go up into the quarter. All the estimates across the board plummeted right before companies reported earnings. So it looked good. NVIDIA is not being blessed with that same thing. Now it says, hyperscalers, existing investments in older NVIDIA chips and potential for achieving AGI with current hardware reduce the urgency for Blackwell adoption, posing further risks to NVIDIA's growth. Now, I want to be clear. I think NVIDIA is going to do just fine. I don't think we're going to have any disasters for this quarter. The issue, if we have one, besides just estimates being too high and NVIDIA beating but not impressing, right? If we actually have an issue with NVIDIA, it's going to come down to likely 2025 guidance for margins and for revenue. See, NVIDIA is one of those few companies that's actually running into a problem of growth, okay? It's a good problem to have, as I said in prior videos, but NVIDIA has just grown so much that their growth rate's going to slow down. It's kind of like Tesla that used to grow like crazy, right? 50% a year. I think they were growing 75% a year, 100% for a couple of years between like 2019 and 2022. But the company just got so big that the growth rate slowed down. That's the same kind of boat Nvidia is now going to be in over the coming quarters. So on top of analysts raising bars heading into the quarter, you also have just lower growth rates that are going to come in 2025 because of the company just getting so big. Okay, so I think that is another risk that I don't think Wall Street's going to talk about this until it actually gets forecasted, right? When Nvidia comes out with their estimates for 2025, the growth rate's not going to look as good as it did last year, right? Okay, now it says, the Blackwell GPU has sparked strong market excitement, and these new chips could be NVIDIA's new super product that accelerates the company to the next leg of growth as the California company continues to dominate the AI GPU industry. In parentheses, for now. While their dominance is undeniable, I'm still bearish. The investor expectations surrounding Blackwells are still overly optimistic, which means shares are exposed from a valuation standpoint. I think there's little doubt that NVIDIA's stronghold in GPUs will continue for the short term, but their stock priced at a premium. Investors are likely overly enthusiastic about the potential for growth. I think it's difficult to see how they can continue to maintain such high growth rates, especially with news out this weekend that their new chip line overheats in some server configurations. This is a big deal because it means hyperscalers have to incur extra costs to incorporate these chips into their data centers. All eyes will be on Blackwell's performance heading into the Q3 earnings post-market on November 20th. Given the hyper-bullish sentiment, I continue to believe that NVIDIA shares are overextended and remain a strong sell in the short term. Now, it says here that Seeking Alpha added research to the Information's initial breaking news that these Blackwell chips were overheating. And they say, according to the report, the Blackwell graphics processing units overheat when they are connected together with server racks that are designed to hold up to 72 chips. Sources familiar with the issue said, for hyperscalers, this is a big deal. GPUs need to be placed closely together in order for their data centers to run enough compute per foot of floor space for the data center investment to make sense. If data centers need more space to accommodate these new chips, this will be a big setback for many of NVIDIA's customers. This article goes on to say Blackwell has a lot of promise. The question is if consumers will want it as much as the market thinks, given the premise of existing hardware. This article goes on to say that Blackwell has a lot of promise. The question is if customers will want it as much as the market thinks, given the promise of existing hardware and the specific needs these new chips have. Now here is the Q3 preview. As the tech giant prepares to report Q3 earnings on November 20th after the bell, analysts have been mostly revising their estimates upwards over the last 3 months. For the fiscal year ending in January, there have been 46 upward revisions and just 4 downward revisions for revenue, and 40 upward revisions compared to 6 downward revisions for earnings per share. EPS for the quarter is expected to come in at 74 cents a share, with revenue of $33.07 billion. This would represent EPS growth of 85.14% year over year and revenue growth of 82.5% year over year, respectively. To me, while these expectations are likely attainable because they do not rely on Blackwell demand, Q3 is expected to be the last quarter without Blackwell sales. This means investors and analysts will need to see on that call that Blackwell revenue will be booked in full year Q4, the current quarter, to support full year expectations. On the earnings call, I will be looking for data on how NVIDIA is solving their Blackwell technical challenges. I think it's clear that this is the single most pressing problem facing the company right now. Now, I just want to be crystal clear. I'm not necessarily bearish on NVIDIA, the company, right? There's a balance of things that happens in the short term in stocks. Ultimately, long term, what decides if a stock does well or not is earnings growing and going higher, and Wall Street's interpretation of that, okay? Some of the biggest gains are when nobody's expecting a stock to do well and it does well. All I'm saying here is that in the short term, there's the risk that the markets are too optimistic about NVIDIA's prospects. A lot of people forget that semiconductors tend to go in waves, okay? Semiconductors are not a new a new thing. They've been around for decade after decade after decade. Since the 60s, semiconductors have been around, more in popularity, right? And growing ever since. There is waves to this, okay? And there is a logical case to be had that expectations are a little too high for the near term. Make up any one scenario you want. Maybe it's slower than expected deployment of Blackwell. Maybe it's supply constraints. Maybe it's, who knows, right? Maybe things are just fine, but they're not as good as we think. There is more room for downside in expectations than upside with where NVIDIA is currently at. Now, could NVIDIA go higher on earnings? Sure, it wouldn't surprise me. It wouldn't surprise me if NVIDIA gives us crazy good guidance for next year, crazy good guidance for next quarter. They say issues are resolved with Blackwell. Everything is fine. Okay? There's a good chance of that. But there's also a good chance that what NVIDIA thinks is good, right? What they're perceiving is not good enough for the markets. Again, point out, NVIDIA is really the only company I can think of that has seen their estimates go higher into the quarter versus lower. So just like Google, right? Google expectations for their quarter were in the dumps, okay? Why do you think Google went up almost 10% after earnings? Because nobody was expecting Google was going to do as good as they did. But they did, and the stock was rewarded for it. Now, for 2025, I think the markets are going to do just fine as long as we do not have a recession. I think Mike Wilson's correct in his thinking. Yes, it's kind of a bad sign when the last bear joins the bull camp. Doesn't exactly sound great, as Adam Parker in the last video said with Trivariate Research. It kind of forces you to be less optimistic for the first half of 2025. Nonetheless, I think 2025 is going to be just fine as long as we do not have a recession. As long as, earnings continue to come in well, and there's not a slowdown, things are going to do just fine. But as more people turn bullish, as things continue to be fine for longer, there's the growing chance that expectations need to be reset. It's not expectations get destroyed. That's what happens in 2022, like scenarios when the NASDAQ goes down 35%. That's not what we're talking about here. We're talking about the possibility of a simple correction. Now, do with that information what you want, whether that means you buy a hedge or two, whether that means you mow 10 yards to have $300 more cash to put in the markets. I don't know what you do with that information. Okay? Who knows? You can do with it what you want. But the risk is tilting more to the downside. Okay? It's kind of like 2021 when things were very optimistic. Like the risk in 2021 was things get worse, not even more euphoric. Okay? It's just a balance of risk to reward. Now, if you dollar cost average every week or every month, then this information means nothing to you. Maybe next month you'll be able to buy a little cheaper. Maybe not. If you are a more short-term kind of trader, hopefully also a long-term investor, then this information is very valuable to you. And generally speaking, until we get unfavorable tariff policies that are announced again, the markets, they're probably just going to continue, as Tom Lee said, with the Trump trade, and the areas that have worked so far in the last couple of weeks will likely continue to work. That is banks, that is smaller mid-cap companies. Until something changes, markets tend to just kind of go with what is working. But who knows? What do I know? Let me know what you guys think down below in the comment section. Is NVIDIA just going to impress investors across the board and move up another 10+%? Or are things not going to be as good as we expect, and maybe some rocky times ahead for NVIDIA? I would love your thoughts down below. I will also be running a poll here on the channel as well in the community tab. Make sure you guys go ahead and vote on that. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.